This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. oil production is expected to hit a larger record this year than previously expected, the Energy Information Administration said on Tuesday, even as the agency warned that a glut of oil will weigh on prices in the months ahead. The Department of Energy's statistical arm expects U.S. oil production to average 13.53 million barrels per day this year, up from its prior forecast of 13.44 million barrels of oil per day. Oil output averaged 13.23 million barrels of oil per day last year, which was the prior record. The anticipated surge in U.S. output defies growing concerns that the oil market is oversupplied, with the EIA noting that it expects crude oil inventories to rise throughout next year and put significant downward pressure on prices in the months ahead.
Oil prices steadied on Tuesday as investors weighed a smaller than expected increase to OPEC Plus output in November against signs of a potential supply glut. Brent crude futures settled down 2 cents, or 0.03%, to $65.45 a barrel. U.S. West Texas Intermediate crude was up 4 cents, or 0.06%, to $61.73. Both contracts settled more than 1% up in the previous session after the Organization of the Petroleum Exporting Countries plus Russia and some smaller producers, together known as OPEC Plus, decided to increase collective oil production by 137,000 barrels per day, starting in November.
Moving on to the top news in the energy sector.
The U.S. government is considering canceling billions of dollars in funding for clean energy programs, including awards for auto manufacturing and carbon capture, according to a list of targeted projects seen by Reuters. Projects on the list include 2 major direct air capture hubs that received billion-dollar awards from former President Joe Biden's administration, including one that involves oil company Occidental. Samava reported the list earlier and said it could impact $12 billion in projects.
Indonesia is forging ahead with its plan to make biodiesel containing 50% palm oil-based biofuel, or B50, mandatory in 2026 in a bid to lower gasoil imports, its energy minister said. Top palm oil producer Indonesia currently has a mandatory biofuel content of 40% and is working to increase the amount of palm oil in the blend to reduce its reliance on imported fossil fuels. Minister Balo Lahadalia said in a statement late on Tuesday that the government's plan was to push for B50 in 2026 in a bid to stop gasoil imports. He had said last month Indonesia could raise the mandatory mix to 45% before shifting to B50. Next, we have the top news in metal markets. The European Commission proposed on Tuesday cutting tariff-free steel import quotas by almost half and a 50% duty for excess shipments in a bid to preserve viable steelmaking in the European Union. Due to rising imports and U.S. tariffs, EU steel producers are operating at only 67% of capacity, and the new measures, in line with those reported by Reuters last week, are designed to push that up towards 80%. EU steel is currently protected by safeguards that cap imports of 26 steel grades, with 25% tariffs above those limits. However, they have steadily risen each year despite declining demand and, under World Trade Organization rules, must expire in mid-2026.
The International Nickel Study Group on Tuesday forecast a nickel market surplus of 209,000 metric tons for 2025, increasing to 261,000 tons in 2026. Global demand for nickel is expected to increase to 3.82 million tons in 2026 versus 3.60 million in 2025, the INSG said. At the same time, global output of nickel is expected to rise from 3.81 million tons in 2025 to 4.09 million in 2026, the Lisbon-based group said.
We will now look at the top news in the agricultural sector.
Chicago wheat futures slipped for a third consecutive session on Wednesday as top exporter Russia stepped up the pace of its exports amid abundant global supply. Soybeans also edged lower and corn futures were flat, With large U.S. harvests in full swing and a rise in the dollar to its strongest against a basket of major currencies since early August, making U.S. commodities costlier for importers. The most active wheat contract on the Chicago Board of Trade was down 0.1% at $5.06 minus 1/4 a bushel at 0141 GMT.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.